All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Friday, August 11, 2017. Great webinar last night. We went over the results so far, released the spreadsheet. We're up 21.5%. Actually came out of yesterday's ugly day, down almost 1.5%, second biggest down day of the year, and we actually came out of it ahead because of the UVXY trade and taking Tesla profits early, which we'll talk about in a second here. But let's hit the indexes and sectors first. A lot of ugliness, a lot of red in the watch lists, in the indexes. If we look at SPY got crushed, went from near all-time highs and just above the 9, or right at the 9, to crossing below the 50-day moving average. Did not hold that level after it looked like it was going to for a while, and then crossed the 50-day moving average. So how do we analyze this right now? I always look to the open gaps and these key levels. So basically, we have the old high, which we flew through, and that was right at the 50-day, crushed that. And now we have an open gap here at about 242. Let's get the exact number, 242.19. We want to see how price reacts to that level. If it pulls back in, maybe that's where it bounces. You'll notice a lot of times when we get these deep pullbacks, they go right to open gaps or a key level and then bounce right off those. So what we're going to watch for that. And then obviously if it clears the 50, clears the 9, we would be back on track. We'll see if that happens. Again, big spikes in volume as well. IWM has been getting crushed, and look at that, down 1.8% and testing its 200-day moving average. So not 50, 200. So IWM is looking very ugly. Maybe we look for a bounce here at this level. But when I say these things, that does not mean I think it's going to happen. That does not mean I'm taking positions on that happening. We have to see the signal. So we're just watching to see, is it going to bounce here? We don't know where it's going to happen. So we have to watch that for that. And then the Qs here, almost exactly like SPY, crossing through the 50. We've got an open gap right here. And we're going to watch for how they react to key levels. So basically, if we see remounts, we can get long again. If we see holds of levels, we can get long for quick trades. It could be resumption of downtrend, so we probably can't stick with them too long unless we see real trend reversals. And then if we see consolidations and then breakdowns, and that takes a few days to happen, then we can short. It's tough to short here when we've already had this big move, and Qs were down over 2% yesterday. So that's the idea here. We're basically going to sit on our hands today unless something presents itself showing a clear signal. And look at biotech here getting crushed yesterday. Oil also getting crushed after looking really strong. Glad we didn't take the oil trade now. I've been getting close to taking it. Energy getting crushed, although holding up better than the rest of the market. So that's something to pay attention to. Financials, 1.78%, so right with the market. But these things have shown so much relative strength that they're actually above their 50-day moving average, even with that gain. Gold up, not surprisingly, flight to safety. So gold, JNUG, these are key levels, key things to watch. Maybe we could potentially take positions here. And then obviously the big one, VIX, yesterday up 20, or UVXY, the triple leveraged, up 26%. Looking really good still here. And what I would watch for today, it's opening a little bit in the red. If it does a red to green, obviously that's a day trade. But maybe we can take a position here and play a little pop. That might end up being kind of like a day trade, but maybe we can take it as a swing. Obviously, this was a fantastic trade for us. We got in here, and that's a good time to get to our positions now. We'll go over VIX first. Remember, guys, anytime, you've heard me say this many times, anytime there's indications that we're going to get a market pullback, I put on a VIX position. So we put it on 2 days ago before the big drop because we were seeing weakness in the market. And that got us in right here. And you can see we were seeing weakness in the market. We were seeing strength in VIX overall. Now, VIX is normally in a downtrend, but popping nicely as the market tanks. And that's usually what's going to happen. Range bound or uptrend, we see VIX going down. And then we get these pops when when the market starts tanking, and we saw that yesterday. And you can make much more playing VIX than you can shorting the market. You're not going to get 26%. With the leveraged ETF, you got for the Qs, you got 6% or 7%. Here we got 26%. So our entry was right about 30.40, 30.50, somewhere in there. I've got it written down in the spreadsheet. And our average exit was 36 something. So I got out at 34 and also at 38, which averaged out to obviously 36 here. And it actually popped to 40, but this ended up being a huge win. Then I also took profits in Tesla, which ended up pulling back to 355. Our entry was at 351. Target was at 383 and maybe even playing for a breakout. I rarely adjust my plan for a trade. I don't like to micromanage unless there is something strategic. And obviously we have something strategic right now with the market tanking and a lot of also knowing that the news that's out there with Korea and all that can really impact the market. So I want to lighten up my positions anyway. And then we had a decent profit here when it popped to 364, 365 after being in at 351, only halfway to our target, but we got a decent profit. So it was a good time to take the profits and knowing we had to balance some losses as well. And that one of them was Netflix. Now, we were playing this gap down reversal. I talked a lot about it. But it got taken down with the market. I really do feel that if this hadn't happened yesterday, Netflix would be bouncing back after negative reaction, overreaction to the Disney news. But the market took it down here like it took everything down, and we got stopped out. And then got out of LABU very early, actually before my scheduled stop. So we got out, I think it was in the 59s, and I was going to get out in the 58s. And then you look at what happened. It went all the way down to 55. So we're going to stay away from biotech now, but that ended up being a small loss. Didn't hurt us much. And now I'm in two positions right now still, and that is FSLR. And the stop here is at 45, basically testing this gap here. And hits that level, it'll just be a normal loss, no big deal. And then same with Facebook. We're testing the gap level here, and around 165, and looks like Facebook is up a little this morning, so that's good. Back in this range, and hopefully it stays that way and can bounce here. So those are the two positions right now, and we've got a cushion because of the UVXY trade. And this is why we take it, not only because we can get big gains on the spikes, but also because it hedges when we're in current positions and all this is happening. So essentially we got, you can see here, Tesla 1200, UVXY 4200. So right there we've got that $5,400 cushion, and then the Netflix and LABU, very small loss. Netflix because the gap down was a little bigger, but overall 2,500. So you can see here balancing out, we're up way ahead. So even if Facebook and FSLR lose, we actually still will be ahead, and we're doing a lot better through this than most traders who are just getting crushed with getting stopped out of all these positions. So that is why you've seen me do it before. Last time it did not work, but it balanced out the long. So it was kind of the opposite, where the VIX lost, but then all my longs did well. So that balanced out that way. This is the opposite. The VIX is working and the longs are getting stopped out. Always use that VIX as a hedge when the market is getting scary here and you get these big pops. Okay, so what are we looking to do now? Basically, watch for reversals in the market or consolidations and breakdowns. Until that happens, we don't really do anything. So I am watching UVXY, also watching SVXY, which is the inverse. So if the market comes back, we can actually short VIX by going long this thing. So we'll keep an eye out on that. Snap, which has looked really good, is actually gapping down to lows again this morning. So we'll watch a gap down play in that. We are watching the Qs, and if we get a signal, we'll play SQQ or TQQ. SQQ is essentially shorting by going long, and TQQ would be just like playing the Qs, except it's leveraged. Netflix, we're going to watch for the 50-day moving average and this gap right here. So let's watch these two levels to see how Netflix reacts. The rest of the FANG, pretty much the same thing. NVIDIA, we're basically watching the same thing. How does it handle? How does this thing handle the 50-day? And NVIDIA is gapping down, I think, on earnings here. key level. So let's watch to see if there's a gap reversal in NVIDIA. And that's basically it. Take it easy today. A lot can happen over the weekend when we have this politically charged climate. So it's best to be safe. Not too many positions right now. We go back into really conservative mode, and you can see this year, what have we done? We go into modes where we trade very aggressively and modes where we kind of step back. And this was we talked a lot about the March, April drawdown here last night in the webinar, but overall good year, up 21%, while SPY is up only about 10% right now. So we're beating SPY by about 100% at this point. Okay, guys, if there's any trade alerts or anything crazy happening in the market, I'll send out something intraday. Otherwise, I'll see you guys before Monday. Have a fantastic weekend.